Good afternoon. Michelle's just introduced me. I'm a hotels lawyer. I think I said earlier I've had the best of times and worst of times, 25 years in Russia, very difficult market. Now I live in Dubai, which is probably the hotel capital of the world for innovation, can do, how can we help you. I work mainly emerging markets everywhere. I'm going to let the panel briefly introduce each other, and then I just want to touch on, in the last session, it was said that there were two quotes. One was from Lionel, that we haven't seen a lot of innovation. This session is about innovation. Please welcome questions, things that you would like to see from the operators. The other thing, they said, HMAs, franchise agreements, it's been 20 years, 25 years, they haven't changed a lot. A little bit, but not a lot. So please invite me. So start with you, Janusz.
Good afternoon, everyone. Janusz Mitulski, Marriott International. I'm responsible for the company growth in this area for last 9 years.
Hi. Valerie Schuermans, heading the development for Radisson Hotel Group in West and Southern Europe.
Hello, good afternoon. My name is Andrea, and I'm the development director of the group Danubius Hotels.
Good afternoon, Lionel Benjamin. I am the founder of Go Hotels. We are an asset manager, a tenant, and an operator of hotels.
Okay, I think we all know the main operational models. We have the hotel management agreement. There's more and more growth of franchise. We've seen it came from the United States. It's in Europe, the development of the white label third-party manager with a franchise. We have, in certain jurisdictions, more popular than others, leases. We'll get on that with Lionel, with the variable leases and base leases. Franchise, which there's various interpretations of what that is. And then we see, and what I see, I do most of my work, is we're seeing the mix of hotels with other mixed use, not just very, very focused food and beverage, but the branded residential element, which is two benefits. One, it's the way to finance particularly luxury properties, as well as exploit the asset with a captive audience. I think I'll start with you, Lionel, because yours is kind of the more probably less known, your hybrid lease models. And I'm curious, generally leases are driven by the REIT laws and what you can do and not. In some countries, often Germany, Scandinavia, they're more popular. The UK, apart from Premier Inn, less so. But you and your hybrid lease model, if you could explain that, please.
Thank you. So we wanted to have something that I think was a little bit more innovative to the market and would give us a bit of a competitive edge. We've seen management contracts, franchise agreements, as you've said, Scott, and really nothing new to the market, turnover leases with top-up. Where we came in was, we said, we need to do something that is more landlord-friendly. As an asset manager and a tenant, what are we going to bring to the table that would differentiate us, because we're not a big brand? So how would we actually bring together a business proposition that was seen as commercially viable? And we came up with this idea of a hybrid profit lease, whereby we give the landlord his base rent and we give them a share of the profit. So the landlord always knows that his downside is always covered by his rent. And where they have an opportunity is on the upside, where they get a share of the profit. And the differentiator is, we don't take any money unless we make a profit. So straight away, there's a collaboration between us as the tenant, asset manager, and the landlord of the property.
When you say profit, the GOP?
No,
or below?
No, EBITDA. So we're really incentivized to drive that business all the way down to the bottom line. And in order to support us, we needed a brand, because people might think, they know Lionel, he's a good guy, he worked in operations for 25 years, maybe he knows what he's talking about, maybe he doesn't. But when we bring a brand to the table, the brand brings capital, the capital investment to support why the brand should get a 25-year franchise or management agreement. And the brand needs to recuperate that money. So we make the brand our business partner, not just in the brand partner, but actually an equity investor in our business. So for the first time, we saw in the UK a collaborative approach where we have us as tenant asset manager, the brand, and the landlord, all with an aligned synergy to drive the EBITDA. The brand then will not only get its fee, but it will get a percentage share of our business. So the brand's very incentivized to work together with us to drive that particular property. And from the landlord's perspective, they know that if we don't deliver, we don't eat. It's quite simple. We will not take a fee from the middle of the P&L. We will only take our fee once the EBITDA has been delivered, after all expenses have been paid. And so doing this, we found a market that didn't exist in the UK. We don't see it in Europe either. And we took over 15 hotels in short order. In 18 months, we signed 15 different deals and opened 15 hotels, which are now operating across the UK. And we'd like to, see how we can work with that model moving forward.
And with the brand, they're managing, or a mix of manage and franchise?
In some of the cases, it's a franchise at the moment. So in some of the cases, the brand is managing. In other cases, we're managing ourselves, and we have that opportunity to always switch, to do whatever's best for everyone's interest.
Okay, let's move to the two large brand operators, Janusz and Valerie. You don't do leases, I assume. Certainly Marriott doesn't. What tricks do you have in your bag to attract people, apart from lower OTA rates and the like?
Yes, we don't do leases, and this is the Central Eastern Europe I'm responsible for, that covers Czech Republic, Slovakia, Poland, and Baltic countries. This is a majority franchise market, with also a strong portion of the owners that are lease operated. So we have local partners. We have also partners coming from to this area from Western Europe that do leases under our brand. So we are creating a sandwich structure. Our franchisee become the tenant, and between them and the landlord there is a lease agreement, and between us and the operator there is a franchise agreement.
And in Eastern Europe, are the franchisees usually either the lessee or the owner, or are you using third party?
Can you repeat the question?
Particularly in Eastern Europe, are the franchisees, are they the actual lessee of the property or the owner of the property, or are they using a third party?
In majority cases, they are owners of the property, because majority of the owners, they prefer to operate themselves. If they don't, then the second option is lease.
And Valerie?
We tend to have a more industrial approach to the business. So we do lease ourselves in specific cases. We do management agreements and then franchise agreements. Needless to be said, and I think it has been repeated throughout today already, that the bigger proportion of our business today is either lease or franchise driven. That lease ability of Radisson Hotel Group is predominantly focused on capital cities, strategic locations. We would not be doing that in, for example, a secondary destination in Czech Republic. But we do consider in Central Europe some specific locations for leases, for launching brands, for fueling growth of specific concepts that we want to push and that we want to grow more actively. And then I think what I can only kind of agree and contribute to what Janusz was saying. If we look at the franchise community that we have in this part of the world, it's predominantly owner-operators. So we don't see these large-scale white label operators who are able to provide on a wider clustered approach to leases. And if our franchisee is not the owner of the asset, it's predominantly a management company.
But I'm guessing a lot in Europe, in Southern Europe, you have a lot of family own properties, and they've learned to run a hotel, so they're not new to it. So acting as a franchisee and following the rules is nothing new to them. They're not green to the industry.
No, but even, for example, if we look at our partners in Poland, it's predominantly owner-operated as well. It's family businesses who have been operating local hotels for many years and who have started to look into brands or a more branded approach since, I would say, since 2015, 2017, where we have seen this approach more active, and not only in the urban destinations, but equally so in the leisure destinations, where especially when we look at leisure destinations such as Poland, but equally Croatia, Albania, Montenegro, where this branded leisure concepts become much more important.
Yeah, I'm guessing the primary reason is the distribution that you offer, that it's expensive as a one-man show.
It's the distribution, but it's equally so some part of the financial requirements of the bank to get the necessary funding in certain parts of the world. It's in Poland, for example, the condo financing concept, which becomes more attractive once you have the brand joining the project.
Okay, now Andrea, you're the little guy here. I'm guessing you have to be a little more nimble, a more competitive. What's in your offering? Leases, alternative management structures, and the like.
True, we're not the biggest in the hospitality world, but we are big enough to be institutional, because we have been on the market for over 50 years, managing our own assets, and this helps us to understand owners' expectations and owners' interest in a better way than the average. Our intention is to be flexible, but you know, also in medicine, there is a so-called termination hyper-flexibility, which can be very dangerous for your body if you're too flexible in things. So our flexibility is covering, of course, or going hand in hand with viability. And this is the point when we have to be open either for certain types of management which gives certain guarantees for the owners, but of course in the frames of rationality. As an institutional operator, we believe that it is creditable, and the market and the financiers believe it to us because we proved it for a long time on the market. And when it comes to management opportunity, because we also receive opportunities for management, we can offer more flexibility, for instance, in offering shorter terms, or not just GOP guarantees, but we can be flexible in thinking about flat fees or a lower base fee in return for a higher incentive.
So how flexible are you? No base fee, just incentive?
No.
How low will you come on?
No. I said lower base fee.
How low will you come on a term?
Well, actually, we have to make sure that sustainability is existing on both sides. If it comes to management...
This is not a panel on ESG. This is a panel on contract terms.
You want to talk about numbers, right?
You don't have to give me numbers, but would you do something like that?
Yeah.
I mean, I've seen
No.
smaller
The base,
operators.
that's an interesting question.
No base fee, just incentive fee. Obviously higher, but
no, we can analyze certain things if there is a case for that, because we have quite a creative team to do that, but we don't want to work for nothing because we cannot be existing for a long time. That's why I told you it is about sustainability on both sides. But we are also open to consider flat fee, for instance, which includes base and incentive at the same time if it comes to the point of management. And we are open for lease agreements with fixed, of course, and fixed and variable either, or which is higher. And I think we have many advantages on the market because we don't operate under our own brand only, but we operate hotels under global brands. So we understand how to launch, how to maintain international standards. And I think another...
So what do you mean? You white label, effectively? You will run a
Effectively, we are
Marriott or
doing
a
white
Hilton or something
label
like that?
operation in our own
Use your,
assets. in
use
few
your
of our
management
assets.
skills, okay.
Yeah.
In this, I'd invite the audience. I mean, there's certainly been a general increase in the sophistication of owners in the last 10, 15 years, the growth of the asset manager sector, like we had in the last panel. What things are you seeing owners, asset managers ask on the different structures that you didn't see a few years ago?
As an asset manager, one of the things that we're always looking at is driving the brands in far more focus than perhaps they would want us to, in terms of when the brand is operating or under a management agreement where the brand is there. It's about definition of charges that are going into a P&L and the value. It's all about value creation today. Can we really get value from what the brand is doing in terms of the group services and benefits fee? What does it actually mean? What does it entail? So I think there's a lot more interrogation of a P&L
Can you quantify it?
Yeah, that's
Yeah,
exactly
it's
it. We asked, what do you know, tell us what you spend the marketing fee on so that we don't duplicate. But I think the idea today is to find collaboration with brands. It's not about, as an asset manager, going in there with your baseball bat. That doesn't work. I think we're much more savvy today about the ways of working together and getting collaboration between an asset manager and the brand. And as was said in the panel earlier, it tends to be that owners and asset managers really drive the brand to perform, and that's where actually the partnership works best.
Let me go back to the prior panel and your comment, your gripe, the lack of innovation on the brands. Why don't you expound on that?
So, yeah, I'm sitting here with brands, and there are brands in the room, so forgive me, but we're disruptors, and what I do is I tend to disrupt to challenge, and we're challenging for the overarching EBITDA. The idea is that we all perform better. The higher we perform, the more money the brand will make. And the brands have done very well over the years. I think that the brands should be the innovators. They're the ones with the big balance sheets, and capital values of the brands is much higher than the white label operators or the smaller operators such as ourselves. So brand innovation in terms of, it was mentioned before about Booking.com, Hotels.com, the OTAs, and how we've let go of owning the guest. I think the brands can now focus more on technology, focus more on artificial intelligence, and use their resources to help us innovate and grow business to a new level that to date we haven't seen.
I wanted to come back to your first question, actually. So what we have seen over the past 10, 15 years when it comes to owner demands and what they're seeking, I think a lot depends on the owner profile. When you're dealing with an institution, they're looking for long-term fixed income, as little disrupted as possible. And then we see the introduction of the green clauses, which is extremely important to them nowadays. And then when you're talking to family offices or private equity, it's all about flexibility, having the opportunity to sell unencumbered, to ensure that the real estate value is maximized once this sales, the moment to sell comes up. And the different approaches between those different profiles of investors is just becoming more and more obvious and more diversified. So then it's up to the operator, whether it's a white label, whether it's the brand or the partner in the project, to make sure that you're a relevant partner, because that's the only way you're going to be able to cooperate.
Just you mentioned green clauses, and Radisson, particularly in the Radisson SAS days, is Scandinavian, probably has led the way in environmental focuses. Is Ufi in the room? No. Why are those so hard to sell? I mean, they seem like easy, quick money, the type of environmental requirements you make. Not just the benefits, the goodwill benefits, but just they're easy, quick paybacks. And I think of particularly in my market, the Middle East, anything that's energy saving is an immediate return. You wouldn't even renovate a 30-year-old hotel. You'd tear it down because the insulation just isn't working. Why do you think that is? Why do you, I see, deals I have, and it seems a very difficult sell, or the brands just don't do it well.
Oh, my experience is a bit different. I would say it was a more difficult sell just before the pandemic, and the conversation was very, very different. Nowadays, when you are dealing with the institutions and the ESG requirements become such a hot topic, they just come with their 5 pages of green clauses, and we hope it's not a problem to you, and please incorporate them. And it's from a you have initiatives that you can take from a real estate point of view, which we both have to agree on, and we come a bit back to the discussion that we had earlier with Siemens and the technology on whether it's capitalized or not. And then secondly, there is a part that you need to implement operationally, but I believe both of us are equally engaged in making sure that we are as sustainable as possible and as certified as possible when it comes to obtaining the relevant certificates in the day-to-day operation of the hotel.
Yes, we've been to building efficiency elements before it became fashionable. Yeah, so all those elements related with the utilities or the heating, all those elements. Then plastic reductions came, and so we are there. But coming back to your previous question regarding what's new and what owners are asking. Pandemic period showed that we were more and more dependable on the local market than the international market, especially for the certain period. That created questions to become more local. What are you doing local? Yeah, so that was our answer. Was we introduced the Polish version of the websites, Turkish version of the websites. So that was very well perceived by our partners, and it helped again growing and channel the sales through our channels. And what Lionel mentioned, I can't agree. We are not focused on the development, new stuff. I mean, looking how we are growing and what functions we are introducing to the Marriott Bonvoy app, and mobile key. That I remember when I joined Marriott in 2015, we already had all the specification for the mobile key that was introduced 2 years later, but investors they know in advance, not to get additional costs later on. And then during pandemic, the mobile key was something very popular, yes, because it forced us. So this is mobile check-in, mobile key. All those elements are there in our hotels, and it's more and more is coming.
So it's,
I think on your points in terms of contracts and what are we seeing in contracts and ESG, the fact that we even talk about ESG in every single hospitality conference or convention that we attend has meant that everyone participates in it, because these events are brand-led, there are owners, there are operators and the institutions, and the fact that it's a focus in these conferences is because it is featuring now, and it didn't feature before, whether it's through loans that the acquirer needs to satisfy certain conditions, or whether it's because the institutional investor has their own parameters of ESG that they have to work within and satisfy. So I think it is a focus today where it hadn't been previously, and I think we'll see it more in the contracts moving forward, so we'll be obliged to.
but can anyone in this room really tell me really what ESG means? I mean, how can you have a net zero World Cup? It's not possible. And we talk about getting rid of plastic straws. That's not even low-hanging fruit. That's fruit on the ground. That's minor. It's the big hits, which probably are going to be things like insulation, energy, water saving. And I don't see any
I mean,
really
it,
quantified.
everything,
that's where-
everything starts with small steps. I mean, imagine us having 1.5 million rooms, yes, with the average occupancy 70-75%. So if you have, imagine the amount of the plastic shampoos and everything we used to produce before. That's containers. Yeah. So I can't agree that plastic straws is not relevant. It is, because world is, you know, you need to do those small steps to get where we want to get. Evolution rather than the revolution.
I think the social side we've been doing in hospitality forever. I came from an operational background for over 20 years, and the S and the G we've had in place, but it wasn't called S&G. It's the E part which has become more challenging because someone's got to fund it. And who's going to fund it when you're retrospectively fitting out a hotel that's 35 years, you know, old, or 135 years old? When you're doing a new build, it's fully featured. It's the retrospective where we have the challenge in the E, and who pays for it.
Any things that you would like to see in negotiating with these guys? Anyone? You mentioned being local. The bigger you get, the more standardized you get, the less local you are. And there's potentially the benefit that a third-party operator who knows the market, has local people, is more nimble, and as my mentor in this industry said, used to tell me, he was the brought Interstate and the Marriotts to Russia. He said, you see, I work for the owner, and the brand works for the brand, and that is the difference. And they used to deliver good numbers, and Marriott never said a word. But this localization through finding the right people, finding the right GM, because how many deals I see, and the person that the big brands select as a general manager is completely inappropriate. It's who's in their stable, who do we need to put a job in. Whereas finding someone local through a franchise who knows the market, maybe is married, embedded in the community, particularly in secondary markets. Yes?
I don't fully agree with that, and I'm being kind. I don't agree with that. If I look, for example, in Central Eastern European portfolio that we have, where we have approximately 60 to 70% of our business is managed, I can very easily say that 90% of our general managers are local. We have 23 hotels in Poland, of which 60% is managed. We have literally one international general manager, two, who are based in Warsaw and are part of the regional structure that we have. So saying that the brand is just putting expensive labor or the wrong profiles in those countries, that hurts my heart. And I think, obviously, of course, we work with the brand. We want the brand to thrive. We want to see brand compliance, because otherwise the brand has less value. On the other hand, if we don't work for the owner, we are not focused on the right things. How many loyal guests do you need to create in order to achieve the same value for a company as either Marriott or Radisson, to achieve the same value compared to an owner who has 2 properties with you? That's a lot of guests. That's if I can have with one owner 2, 3, 4 properties, because there is loyalty, because there is partnership, that's a lot of value to the company. And that's where I, from a development point of view, see how we can create value for the group, say. And within the Radisson, we have more than 65% of our owners who have more than one hotel. And I think that's where we really create value. And we need to keep the eye on what's important. Yes, the brands count, and what the brand stands for count, but equally our partners. Otherwise, we wouldn't eat, we wouldn't exist.
Well, yeah, and
Thank you, Valerie.
when you get the economies of scale that are generated with multiple properties is phenomenal. And, you know, clustering makes sense. Where some regions clustering, nobody will do finance because they don't want the information disclosed.
Scott, how would you define in one word, what is the brand? Whatever brand you have in mind, it could be car, it could be clothes, it could be hotel. What is the brand? One word.
I suppose it's some sort of supposed identity.
It's a promise.
A promise.
Brand is a promise.
Jeez.
I've
I've had a lot of people lie to me then.
But we have to pay a lot for this promise.
Brand is a promise. Brand is a promise. If you stay in Marriott
Expensive
hotel,
promise.
you know the standards you're gonna expect. If you buy a Mercedes, yes, you know what you're gonna expect in terms of comfort, durability, and everything.
Perhaps,
if you
but
buy
that can
the
become
watch,
boring too. It becomes 50 Shades beige.
but this is why am I mentioning this? Because we as a brand providers, first we need to be guardians of the brand, and this is why there are certain standards, and we are monitoring this, because otherwise the loyalty guests will not become loyal. They will not return.
But you've got
But
35
also-
brands. That's a lot of promises.
No, there are different segments. There are different continents. There are different markets. You know, if you are global, there is no longer one fit all.
Can you
Forget
tell me
it.
the promise of all 35 promises?
Yes. Another
We've got a
element.
long time to Another session.
Another element is also related with the owners, because owners they also expect us that we will bring new hotels that will also maintain the standard, because otherwise it will be a dilution. It will be a dilution of the investment
But to
and
support,
value, and this is the value.
Andrea, you
but to support the idea of the brand factory, I can tell you one of my experiences. It happened in Vienna a couple of months ago. I was just walking into different hotels. I wanted to check on the luxury and the upper upscale, those with brands, known brands, and those without known brands. Because in Vienna, we can see investments and developments in the prime segment, fantastic investment, extraordinary high investment values, but I didn't see any known global valuable brand upon the hotel. So I went into that hotel. It was fantastic, beautiful, but it was almost empty. And when I went into certain other hotels with well-known valuable brands, I realized that the lobby was full, the hotel was vibrant, and I had to acknowledge that it's the guests, it's the people who need the brand, primarily, of course. Brand needs hotels and operators and customers. But there is a famous saying of one of our Hungarian Jewish origin film producer, Adolf Cukor. He emigrated to the United States and became a famous film producer. And one of his famous sayings was, "The audience never lies."
The what? Sorry?
The audience never lies.
The gentleman here, bring the microphone over right there, please.
Guys, as you see, I see that Scott is 1 and you're 4. I just need to interfere on his side. I fully agree with all of the questions that you asked. So I'm representing an investment company that has worked throughout the years with a couple of brands. We are still working with 3 of them, 3 of the biggest ones. And yeah, the brand, funny thing. So first I agree that there is a huge difference if you have a local representative. in between the brand. The difference, I have checked it through the years, it's around 15 to 20% versus what is able to do the operator without local people and what is done if there are local people. What I'm seeing now with the brands, that with the huge expansion, especially after COVID, a lot of the GMs are now mercenaries. So years ago, it used to be if you are part of the Hilton or the Marriott, you're 20, 30 years with this brand. Now it's not anymore. They're buying GMs one to each other without the issue. The brand promise, it depends. It's interesting to see if the person that was asking about the technology, the reality is at the end of the day, the price, either it's OPEX or CAPEX, is always paid by the investor. So wherever you put it in the P&L or in the CAPEX, at the end of the day, this money comes from one and the same pocket. So you just cut it in different shares. And the brand promise that you mentioned, it's funny to see sometimes hotels that are refurbished, but hotels that are owned by the brands and hotels that are owned by individual investors. So with the individual investors, you have the 100% brand standards implemented, even a bit more. But if you have a hotel that is owned or partly owned by a brand, then it's really more flexible promise on the site. So, yeah. I believe that all of the questions that you raised are quite important. And the brands, yeah, you have the promise, you have the sales services, you have the loyalty programs, but at the end of the day, the one that is paying the check at the end of this is the owner company. So they should be different way. I liked your question regarding the base fee and the incentive fee. Nobody is eager to work only on incentive fee because it's a risk. It's a risk if you're going to do your job so good that you're going to get paid at the end of the day. And through the revenue, it's much easier. So.
Yeah, I see that with a few of the smaller operators, certainly in the Middle East and Asia.
Yeah, but none of the big ones.
But, and then going to your point, you know, the mercenary GM, I'm not sure that's such a bad. If you can if you've been a general manager of a Marriott, you can manage a Hilton, you can manage a Radisson, and I've read these operational standards. There's a lot of plagiarism. It's an incestuous industry. People have cut and pasted things, and I would rather. And I've worked in, you know, especially in emerging markets. I'd rather than the brand recommend a GM, go up the street. It's a good GM from the Radisson. He's well known in the community, the Chamber of Commerce. He's married. He likes living there, even though it's a tough place. Poach him, give him a good package, and he'll be much better than what a brand can offer me.
And introduce it to the chain with the support letter.
Sorry, but guys, but that's not fair because that's actually in the brand's agreement. I'm a brand guy for 12 years, once upon a time in my career. I'm not a brand guy today. I work with all the brands and I'm agnostic. But in every management agreement, the owner's got veto on who the GM should be. So if the owner hasn't negotiated that in his management agreement, he missed the trick, or his lawyer didn't advise him right.
Yes,
so
who
let's
the
be
brand
frank,
is offered,
it's all in
he's
the
offered
agreement.
his people. I don't want his people. I want the guy up the street.
So you can say no. That's the lawyer putting it into the management agreement. You got the veto.
2 or 3 strikes, and then you have to take the
3 strikes, pretty good. 3 strikes,
Three
pretty
is pretty good. Yeah.
So I think the options are there. I think what we've said here today on the panel before and on this panel, there's a place for everyone. There's a place for the management, the franchise. There's a place for the lease agreement. Everything's got a place, but we haven't innovated. We haven't changed them. If you, as lawyers or brands, look at these agreements over the last 30 years, how much have they evolved? And yes, there's been changes. I remember seeing a 105-page Hilton agreement, which maybe today is a much shorter agreement, and the salient points are covered more focused, more practically than they once were. But in essence, they haven't changed that much. And if it's going to evolve and the industry is going to evolve, we need to reflect on how we work together.
Mm-hmm. I think if any agreement had the biggest changes, agreement type. It was the lease agreement compared to the franchise and the management agreement. We see much higher reporting requirements under the lease agreement. We see much more involvement from the asset manager compared to the leases that we signed, for example, before 2006. That's I think, has been more dynamic compared, and I agree, we should be more innovative compared to the franchise and management agreement.
Valerie, that to me is reflective of the ownership base. If I look at who the owners were over the last 30 years in hospitality and how they've changed, it's been massive. I remember in the days of Hilton when Raymond Shigo was the only development director that Hilton had globally, one guy. You know, when he walked in the room and he was doing a new deal, it was, wow, Hilton's got a new guy and doing a new deal. It's moved on because ownership's moved on, and there's now today ownership that will have 50, 60 hotels, the institutional investors and what have you. So I think we need to, as an industry, embrace the new ownership, and we need to work differently with new owners.
Raymond had a big territory, indeed. Any additional questions for anyone? All right, I like to keep these things lively, so thank the panel. And the big guys, you're big, so you have to get beaten up a little more. So, thank you.